right at the top of the hour again. I want to welcome everyone. My name is Miranda Kennedy, and I'm the director of the ABLENational Resource Center. And I'm so pleased to have so many of you joining us from all across the country today for our webinar on ABLE accounts and special needs trusts. For those of you who are new to the ABLENational Resource Center, I want to welcome you and pause to give you a little bit of background before we get started about who we are and what we do. We are a collaborative whose supporters share the goal of accelerating the design and availability of ABLE accounts for the benefit of individuals with disabilities and their family members. We bring together the investment, support, and resources of the country's largest and most influential national disability organizations. The ABLENational Resource Center was established immediately after the passage of ABLE legislation just over 4 years ago, and we've learned a lot, as you will see in today's webinar. I just want to note that if you have ABLE questions that are not specific to today's topic, I encourage you to check out the wealth of basic to advanced level ABLE resources and tools that we have on our website at www.ablenrc.org. Additionally, at the end of today's presentation, we will be providing a list of resource links on our website and on our Special Needs Alliance Partners website, including links to our ABLE Roadmap to Enrollment and Roadmap to Independence and our email and telephone hotlines and how to get set up with our listservs, which hopefully many of you are already on, which is how you got here. So with that, I'm going to hand it over for a few slides to my colleague Maggie Redden, who's going to go over some housekeeping. So Maggie?
Yep. Hi, everyone. Welcome to today's webinar. I'm actually the NDI admin, and I just wanted to go over a few items to help make the technical aspects of this webinar run smoothly for you. Listening to the webinar, the audio for today's webinar is being broadcast through your computer. Please make sure your speakers are turned on or your headphones are plugged in. You can control the audio broadcast via the audio broadcast panel. If you accidentally close the panel, you can reopen it by going to the Communicate menu at the top of the screen and choosing Join Audio Broadcast. Listening to the webinar, slide 2. If you do not have sound capabilities on your computer or prefer to listen by phone, please dial 1-650-479-3207 and you'll enter the meeting code 664-393-091. Captioning. Real-time captioning is being provided during this webinar. The captions can be found in the Media Viewer panel, which appears in the lower right corner of the webinar platform. If you want to make the Media Viewer panel larger, you can minimize other panels like chat, Q&A, and/or participants. Submitting questions. For Q&A, please use the Q&A box to submit any questions that you have during the webinar, and we will direct the questions accordingly. If your question is not answered during the webinar or you are listening by phone and not logged in, you may also email questions to info@ablenrc.org. Technical assistance. If you experience any technical difficulties during the webinar, please use the chat box to send a message to the host NDI admin, which is myself, or you may email mredden, that's MREDDEN, at ndi-inc.org. Please note this webinar is being recorded and the materials will be placed on the ABLENational Resource Center website along with all of our other webinars at ablenrc.org/webinars. And with that, I will turn it back over to Miranda.
Thank you, Mag. Now I'd like to center presentation.
I of course will be a little bit. Yep. There you are.
Okay, is that any better?
Yep.
Okay, great. I just won't move. Thanks, Maggie. Okay. So, yes, again, my name is Miranda Kennedy. I'm the director of the ABLENational Resource Center, and I'll be serving as the facilitator for today's presentation. And I'd like to take a moment to introduce our presenters for today. Serving as our representative for the Special Needs Alliance, we have Stephen Dale. Mr. Dale is the principal attorney at the Dale Law Firm, which provides quality estate planning to clients by working cooperatively with clients' tax, financial, and insurance professionals. He's also the trustee of the Golden State Pooled Trust, which serves beneficiaries in California. He oversees a series of MCLE programs accredited by the California State Bar, which provides education to attorneys and trustees on a wide variety of disability-related subjects. He serves on the boards of the ARC of California and the Contra Costa County Developmental Disabilities Council, and spends time attending disability rights activities and events, including legislative hearings and serving on boards and committees of disability rights organizations. He speaks on a variety of disability-related topics across the country, including speaking annually at the Stetson Law and the Center for Excellence Special Needs Conference, as well as the University of Texas Annual Special Needs Conference. He is the recipient of the 2010 Teresa Foundation Award and the 2007 Nayla Powley Award. Additionally, Mr. Dale is a long-standing member of the Special Needs Alliance, a national not-for-profit organization of attorneys dedicated to the practice of disability and public benefits law. Thank you for joining us today, Stephen. And also joining us is one of our 9 brand new 2019 ABLENational Resource Center ambassadors is Amy Tesler. Ms. Tesler lives in Oakland, California, and is the parent of a son, Scott, with autism. Her son has an internship at the DoubleTree Hotel in Pleasanton, California through Project Search. And Scott is an ABLE account owner currently in Ohio, but they plan to transfer his ABLE account to CalABLE out of California, which just launched in December. Ms. Tesler is the Education and Outreach Coordinator for the Dale Law Firm, and I know you all will appreciate her perspective as the parent of an ABLE account owner. Our subject matter expert for the ABLENational Resource Center team on today's webinar is Marlene Uliski. Ms. Uliski retired from the Social Security Administration after a 35-plus year career. She developed expertise in developing relationships with partners across Florida to educate them on the disability programs and employment support programs administered by Social Security Administration. After leaving SSA, she worked with the Florida Office of Vocational Rehabilitation as a consultant to establish and roll out the Partnership Plus program under the Ticket to Work legislation and was certified as a community partner work incentives counselor through Virginia Commonwealth University. She was then asked to return to Social Security to conduct training and to assist them with managing critical integrity workloads, including OIG investigations and medical and work continuing disability reviews. At the National Disability Institute and with the ABLENational Resource Center team, Ms. Uliski is a manager with the Training and Technical Assistance team and works on various projects across the country. Here at the ABLENational Resource Center, she is our disability benefits expert, and she provides support to her colleagues, to providers, and to beneficiaries when complex SSA or other disability-related issues arise. She is also a disability consultant for the state of Florida and for private individuals. Ms. Uliski is a graduate of Robert Morris University in her hometown of Pittsburgh, Pennsylvania. So with that, we're going to be covering the following topics in our webinar today. And as you can see, I think Mr. Dale, Ms. Tesler, and Ms. Uliski will be well able to cover this information for us. So what we're going to be covering with the rest of our time, here's our agenda. We're going to be talking about Special Needs Alliance and the ABLENational Resource Center and our partnership, working together in this space. And then I'm going to be handing it off to Marlene to go deeper into what are ABLE accounts, and then Stephen will be sharing what are special needs trusts. We'll be talking about making decisions. Do you go with one or the other or both? And talking about that. And as part of that, sharing things to consider when using an ABLE account and a special needs trust. And finally, at the end, we hope to have some time for questions. As mentioned before, this webinar is part of the ABLEnational Resource Center's ongoing collaborative efforts with the Special Needs Alliance. Again, the Special Needs Alliance is a national organization comprised of attorneys committed to helping individuals with disabilities, their families, and the professionals who serve them with special needs planning. At the end of the PowerPoint today in our presentation, we'll give you some information on how to contact a special needs attorney if you should need to do so. The goal of this collaboration between the ABLEnational Resource Center and the Special Needs Alliance is to educate individuals with disabilities, their families, and other stakeholders on how ABLE accounts and Special Needs Trusts, or S&Ts, can contribute to improved quality of life. And when used properly, how funds in either are not considered accountable resource by means-tested government programs, which forms the foundation of special needs planning. ABLE accounts, it is of vital importance, we should note, that ABLE accounts and S&Ts, Special Needs Trusts, can supplement means-tested government benefits without affecting an individual's eligibility for them, and ABLE accounts and S&Ts are governed by very different rules, which Mr. Dale, Ms. Tesler, and Ms. Uliski will be going over during our presentation. So just before we get into that, let's talk about ABLE accounts. There's only 2 more slides left of my time here with you today, but I want to cover these 2 slides before I hand it over to our presenters, just to share some quick background on ABLE to those of you who might be new to this space. ABLE's true name is the Stephen Beck Jr. Achieving a Better Life Experience, ABLE Act, which became law on December 19, 2014. It was one of the most bipartisan bills in history, second only to the ADA, the Americans with Disabilities Act, in terms of the impact and opportunity for people with disabilities in this country. It received 85% of the entire U.S. Congress support. 381 out of 435 in the U.S. House of Representatives voted for this, and 78 out of 100 in the U.S. Senate. ABLE legislation authorized, but it did not require states to establish ABLE programs. States acted very quickly to pass state ABLE laws and set up ABLE programs. In June of 2016, we had our first ABLE account available, and to date, there are 41 states plus D.C. that have launched ABLE programs, and most of these, but not all, accept out-of-state enrollees. There are approximately 33 accounts open nationwide with over $150 million invested in these ABLE accounts. ABLE really does create a new option for some people with disabilities and their families to save for the future while protecting eligibility for public benefits. And with that, I will hand it over to my colleague Marlene to tell us about why is there a need for ABLE.
Okay, thank you, Miranda. As I sit here and I was listening to Miranda speak, I was so pleased that I could see so much interest in ABLE accounts and special needs trusts. As I look at the attendance, there's almost 1,000 folks actually listening right now, and that makes me very happy that everyone wants to learn about ABLE and special needs trusts and how they can work together. So why the need for ABLE accounts? Well, we know that there's millions of individuals with disabilities across the country and their families, and they depend upon and rely upon a variety of public benefits to meet their needs for income, their needs for health care, food, and housing assistance. Some of the programs which may be real familiar to you include supplemental security income benefits, the Medicaid programs, including Medicaid waivers, Medicare savings programs, supplemental nutrition assistance programs. I'll refer to that as SNAP, and that means food stamps, or low-income housing and energy assistance programs and housing assistance. Now, we know that eligibility for many of the programs require an individual to be of limited means. And as a result of the restrictions, there's millions of individuals who are kept in a poverty cycle because of increased income or resources can cause them to lose vital supports and services. So for the first time in public policy, the ABLE Act recognizes the extra and the significant costs of living with a disability. Some of the examples of the costs could include things like accessible housing or transportation, assistive technology, special health care costs not covered by Medicare or Medicaid, or perhaps even a personal attendant. Now, the ABLE Act allows eligible individuals and their families to establish ABLE savings accounts that will largely not affect their eligibility for federally funded means-tested benefits. And we'll talk more about that throughout this presentation. Now, the ABLE Act spells out the purpose of the Act in the first few lines, and it indicates that the purpose is to allow individuals and their families to save money to maintain their health, their independence, and their quality of life. But importantly, it goes on to say that the funds in the ABLE account will supplement and not replace the benefits provided through other means, and that's of vital importance. Go back. Okay, so what is an ABLE account? Well, an ABLE account is a Section 529A account under the IRS tax code. It's a tax-free savings account, and it's real similar to the 529 college savings account. The ABLE account is owned by a person with a disability, and disability must have began before the age of 26. Now, that individual must meet a severity of disability requirement. When we talk about disability, which began before the age of 26, that doesn't mean that someone who's older cannot qualify for an ABLE account. It just means that disability must have begun prior to the age of 26. Now, the disability requirement, meeting a disability requirement, what that means is that they meet this disability requirement if they receive Supplemental Security Income Benefits, or SSDI, Social Security Disability Insurance Benefits, and that includes DAC benefits, Disabled Adult Child Benefits, or they have a disability certification from a licensed physician that indicates that they have a physical or a mental impairment or a combination of impairments, or that they're blind. And you'll see in Social Security language, they make that distinction between impairments and blindness. The impairment must result in marked and severe functional limitations, and it must have lasted or it must be expected to last for a continuous period of not less than 12 months or to result in death. Now, for those of you who are familiar with Social Security language, like I am, you can see that the ABLE Act mirrors the language in the childhood definition of disability in the Social Security Act. And importantly, I think you can also see that it does not include any reference to substantial gainful activity, or SGA. Now, that's significant because it means that an individual with a disability who's working above the SGA level despite their disability and who does not qualify for a benefit under SSI or SSDI, they're still eligible if their disability began before the age of 26 and they have marked and severe functional limitations and so on. Now, here at the ABLEnational Resource Center, a lot of questions come in asking whether or not someone who has a specific diagnosis qualifies, but they're not receiving benefits, if they're ABLE eligible based upon that particular diagnosis. And the answer to that is you actually need to talk to your physician and ask him or her that question. It's more than just a diagnosis, but it refers to a level of severity that meets or medically equals or functionally equals a listing in the listing of impairments in Appendix 1, Subpart P of the Code of Federal Regulations in Part 404. The listing's categorized by body system, and it also indicates the criteria needed to confirm the existence of that impairment to satisfy the criteria of the specified listing. So it's really important that you talk to your physician. And last of all, on this slide, I just wanted to say that importantly, I want to caution you that the law states that once an individual does obtain that disability certification, made with regards to the establishment of eligibility for benefits under Title II, Title 16, or Title 19 of the Social Security Act. So who may open an ABLE account? who may establish it. And if that's any eligible individual with capacity who can open the account. But the law does recognize that some individuals may not be able to establish the account by themselves. And in those cases, the individual's agent who has power of attorney or his parent or his legal guardian may establish or manage the account for that individual. Now, before I turn it over to Steve, I just wanted to mention 2 tips that he'll probably go into or he may elaborate on further. It's just that many state ABLE programs have forms available to establish power of attorney on their website or an authorized agent on the account. And in my family, we use that feature for a family member who is establishing an ABLE account so that myself and my brother could assist my family member who does have capacity with managing his account. And even when that individual does have capacity, it's beneficial to establish. So with that, Steve, I am going to turn it over to you for the next 2 slides, which are a case study.
As
an attorney, as an advocate. Yes.
Oh, just to let you.
Can you?
Go ahead.
Are you able to hear me?
Yes.
Okay. Let me know if there's an issue. Okay. Anyway, getting back to this, I want to thank you so much. And, the first thing I do want to cover here is the issue of who can establish the account and things you might want to think about, depending on the capacity of the ABLE beneficiary. And I want to preface it with this. The disability community is a broad community, and it's broad from group to group and individual to individual. So, like, for instance, my friend and SNA member, Brian Rubin, says all the time, for instance, if you've met one person with autism, you have met one person with autism. But this is something really important that you really should take a look at here, depending on the individual, okay, is that, we'll go back to what was covered, that the folks who can establish and manage the account are either the potential ABLE beneficiary themselves, a parent, an agent under a power of attorney, or a guardian or conservator, whatever they call that in your state. So one of the things you really do want to plan for when you're doing this is, to really keep that in mind. And the other thing that's going to be important as we go through and dig a little deeper into ABLE is that a key feature of ABLE is that the funds in the account belong to the ABLE beneficiary. And this is going to be really key, especially when we talk to housing here. So just to reemphasize, if you're dealing with somebody who definitely has capacity, which I'm sure is the majority of the folks that are being served, you should do a power of attorney. And, for instance, I just had somebody the other day I helped get into a program here, and they wanted to have their brother manage the account. And they said, well, you do that through a power of attorney here. And they said, well, can you do one for me? I said, yeah, I could sell you a power of attorney, but on the other hand, almost all programs have them online. Okay, so this is a real easy thing to do. And I would say for folks in that situation, the first thing you do is do a power of attorney and select who you would want to be in charge. If you can't manage it yourself currently, or in the event that you lost capacity or that kind of thing. Now, I want to illustrate something because a large amount of folks that I deal with a lot of folks, families that have loved ones with intellectual and developmental disabilities where capacity is an issue. And so I want to illustrate this with kind of a silly little story that kind of goes through. So for you that are parents, you'd want to think about this. My apologies here to references to the Flintstones, but here we go. Fred and Wilma have a daughter named Pebbles. Pebbles was born with a severe developmental disabilities. Fred and Wilma establish an ABLE account under their authority as Pebbles' parents, and that is clearly something that's allowed, okay? Pebbles is the account owner, and that's a really important concept, and that's one thing that actually makes this such a great tool here. Pebbles lacks capacity to manage her account or execute a power of attorney, okay? So the authority to manage this, even as she becomes an adult, will continue with the parents. Fred and Wilma maintain signature authority over the account as parents, okay? So Fred and Wilma pass away in a tragic accident, and their neighbors and best friends, Barney and Betty, step up to take care of Pebbles. Now, the problem here is the neighbors are not listed as somebody who could take signature authority. So in order for Barney and Betty to assume signature authority over Pebbles' ABLE account, they will need to become Pebbles' guardian or conservator. Now, I just want to emphasize before we go much further on this, this doesn't mean in a situation that an ABLE account wouldn't have tremendous value to Pebbles. But the thing you'd want to do when you're setting this up or working with your advisors is really think about, how you're going to use the account and really plan ahead for what might happen if in a situation like this, the parents here were unable to act as the person with signature authority and plan ahead. And through that, once again, you can come to the right answer. So, turning this over to you, Marlene.
Okay, thank you, Steve. So on the next several slides, I just wanted to introduce you to some of the key features of ABLE accounts. And once I do that, Steve will talk more about special needs trusts, and then we'll compare the two and why someone may want one type of account or perhaps both types of accounts. The first key feature of ABLE is easy online enrollment. With all ABLE accounts, enrollment is done online, but in some state programs, you actually can download a hard copy of an application. Although there is no physical location at the current time that you can walk into, a brick and mortar business or bank, in at least one state, that may happen in the future. And if or when it does, you'll see it first on our website at the ABLEnational Resource Center. So be sure to check out the ABLE NRC website, look in our resources section, our news section, and sign up for our newsletter so that you don't miss that. Another key feature of ABLE accounts is that the individual is not limited to enrolling in their state of residence. They can enroll in any program. However, there are about 17 or so state programs which do have a residency requirement. Another key feature is, as Steve was saying, the designated beneficiary is the account owner, although others, as identified on this slide and as Steve spoke about, they have signature authority on the account. Now, that feature actually allows the account owner greater control over distributions from that account. And I think the feature also lends itself to becoming a teaching tool so that someone with a high level of access to the account can disperse small amounts of money to an individual who may be learning money management skills. This contrasts a little with special needs trust, which has a trustee, and it may be a little more restrictive or limit disbursements to specific items or services. And I'll leave that part to Steve because he's an expert in that area. The next two bullets feature tax issues. The ABLE account earnings grow tax-free, they're tax-exempt, and in about 13 or so states, they do have deductions for contributions to an ABLE account by in-state residents. It's real important to remember that contributions to ABLE accounts, they're made with after-tax dollars, and they are not tax-deductible. But it's important to also know that those earnings do grow tax-free. They're federal tax, income tax exempt when they're used for qualified disability expenses. Now, qualified disability expenses, we addressed that on our last webinar last month. Jim Sheldon, an attorney in New York State, and I spoke about them, and we did a deep dive into what are not qualified disability expenses. That webinar is archived on our website, and I encourage you to dive in and listen to that if you're interested in this particular area. But qualified disability expenses in a nutshell are broad categories of expenses. Some examples of that may include medical treatment, education, job training, transportation, assistive technology, legal fees, and so on. But I'd like to draw your attention to housing in particular because we'll talk about that a little more throughout the presentation. This last bullet on this slide, another feature, it was effective January of 2018 under the ABLE Financial Planning Act of 2017, I believe it was, where a 529 account may be rolled over into an ABLE account. Now, 529 accounts are the education savings plans. And what is real significant about this is that some families may have begun saving for their child's education even before that child was born, only to find when that child was born there was a severe disability. Or perhaps that child sustained a disability in childhood or prior to the age of 26. College was not in their future. With this particular feature, families may now roll over funds in a 529 plan to another family member's ABLE account. The ABLE account must be for the same beneficiary as the 529 account or for a member of the same family as the 529 account holder. And rollovers will count towards the annual contribution limit, which we will be talking about. Other key features of ABLE accounts is any person may contribute to an ABLE account. You may ask, who is a person? What is a person? And the IRS code defines a person, and it includes an individual, a trust, such as a special needs trust, an estate, a partnership, an association, company, or corporation. There are two types of contributors. There can be first-party contributors or third-party. Now, when contributions are made by a first-party contributor, that's the ABLE account holder, there's no changes related to how that affects public benefits. The programs look at earned income, unearned income, and resources. Now, here at the ABLEnational Resource Center, we receive thousands of questions, and one question which repeatedly comes up involves income and the mistake in understanding and thinking that ABLE is a tool to shield the beneficiary's income, and it is not. With earned income, if a beneficiary is receiving, for example, supplemental security incomes after certain exclusions, SSI is reduced $1 for every 2 earned. Nothing changes whether that money is deposited into an ABLE account or not. Unearned income, it's still counted the same when it is due to the beneficiary. Examples are shown on your screen. Unearned income can include Veterans Administration payments, alimony, child support, and so on. Finally, as a strategy, we've received questions at the National Resource Center with some individuals believing that earnings or other first-party income directly deposited into an ABLE account avoids income counting rules. And again, I say that's a good try, but that's not true. The beauty of ABLE, though, lies with this next bullet. Contributions by third parties are not counted as income to the ABLE account owner. That means a family member, an employer, a friend, or a special needs trust can all contribute money into ABLE, and it's not counted as income. So let's go a step further. That special needs trust contributing money into an ABLE, not a person by an IRS definition, that gets you thinking about special needs trusts and what they can and cannot be used for. I think Steve will talk to you a little more about this or in greater detail later on. But until then, I wanted to use housing as a qualified disability expense as an example. An ABLE account can be used to pay for housing-related expenses. Now, if a special needs trust pays for housing-related expenses, public benefits can be affected. With SSI and Medicaid, SSA would count this as unearned income and the receipt of in-kind support and maintenance, and they would reduce the SSI payment. Many of the participants today know that when food or housing expenses, when they're paid by others, or when an SSI recipient doesn't pay their fair share of household expenses, that SSI payment is reduced. So this in particular is just one outstanding example of how special needs trusts and an ABLE account can and do work very well together. And finally, up to $100,000 in an ABLE account is disregarded as a resource by federally funded means-tested benefit programs. And that in and of itself is truly transformational as compared to the resource limits that we'll talk about in just a minute. Another transformational change, it's the fact that contributions up to $15,000 can be made per year into the ABLE account. when a beneficiary or when the account holder actually is employed under the Able to Work provision of the Tax Cuts and Jobs Act, he can contribute additional funds into that ABLE account if he or she does not have an employer-sponsored retirement plan. This year they can contribute an additional $12,140 or the individual's earnings, whichever is less. And that $12,140 figure, that's based upon the federal poverty level for a one-person household, family of one, in the 48 contiguous states for the year prior to when the contribution was made. So I think you're seeing now how the ABLE Act has the ability to really transform lives, particularly those who were limited in their ability to save more than $2,000 due to resource limitations. Again, distributions can be made for qualified disability expenses, which are, again, expenses for items or services needed to maintain or improve health, independence, and quality of life. They purposefully fall into categories which are broadly construed, and they're not limited to expenses for which there's a medical necessity or expenses which provide no benefit to others outside of the benefit to the account holder. Some of the other features of ABLE accounts, they vary from plan to plan. They can include things like a prepaid debit card, a checking account option, so that the account can be used more or less like a transactional type account, a savings account option, or the ability to track purchases. And again, it's the ease of using ABLE funds. And the last feature I wanted to highlight is that the ABLE account has no effect on most mean-tested benefits. When I say most, I want you to know that we have gotten policy interpretation from a variety of agencies. We've gotten policy interpretation, and these are all posted on our website, from the Center for Medicare and Medicaid Services, from the U.S. Department of Agriculture with regards to SNAP or food stamps, but we haven't received any policy clarification yet from HUD, from Housing and Urban Development, but we're waiting for that. All federal housing programs are income-based programs, and they don't have asset limits, and we anticipate that ABLE funds would be excluded from HUD determinations, but we're still waiting guidance. When that information does become available, it will be posted to our website, most likely in the ABLE toolkit, and it will also be included in a future Achievable newsletter. So stay tuned and visit our website periodically to find this information. And finally, we've gotten policy interpretation from Social Security, and their POMS or policy guidance is also posted on our website. So you could find all of that material there. So with that, I think we'll talk just a little bit about supplemental security income benefits. But before I talk about that, I just wanted to say a few words about the Social Security Administration. The Social Security Administration is a huge organization. They have over 1,300 offices across the nation. They employ over 60,000 people, and they've taken steps to ensure that their staff all have a good grasp of ABLE policy. Now, Social Security handles a lot of technical and complex work, and ABLE is new ground. So I expect issues to arise periodically, not only in this agency, but in other large agencies administering a complex benefits program. But if there ever is an issue with Social Security or another agency, I encourage you to visit our website and to pull that resource material for that agency from our website and share it with that agency. Now, just the other day, one of my teammates, Laurie Shaler, who is on the call today, was answering a question which came in about a Medicaid termination. She pointed the person who was writing in to the Center for Medicaid Services to that material on our website. That person downloaded that material, took it to their local Medicaid office, and they were reinstated very quickly. She sent Laurie a thank you for that, and for that, I thank Laurie as well, and I want to encourage you all to check out that material on our website. The National Disability Institute, we're not an advocacy agency, and we don't provide case management on any legal or tax issues, but we're happy to point you to the resources to quickly resolve any issues you have. So with that, I wanted to review just a couple SSI basics before we talk about why ABLE, and I turn it over to Steve. Many individuals write in and they ask us questions about SSI, about Medicaid, so I just wanted to provide this basic information. In about 34 states across our country, the SSI application is an application for Medicaid, so when someone is determined eligible, Medicaid comes right along with SSI. In the remaining states, there are other application processes, but no matter how Medicaid is obtained, ABLE affects the accounts the same. SSI is a needs-based program. It's meant to provide food and shelter, as we said earlier. Income of any kind, whether it's earned or unearned, it either reduces or could cause an SSI benefit or Medicaid to suspend or terminate. Suspension is not the same as termination. Suspension is a temporary stoppage. When 12 months elapse and someone is in that suspended status for reasons other than work, their benefits will terminate, which means that they have to reapply to again become eligible. When someone other than the SSI recipient pays for food or shelter, again, it's considered in-kind support and maintenance, and it reduces the SSI payment. The program also looks at resources, over $2,000 in resources for an individual or $3,000 for a couple may also cause the SSI payment to suspend or to terminate. Again, when 12 months elapse and someone is in that suspended status for other than work, their benefits terminate. So why am I telling you this? It's so that you can appreciate or further appreciate some of the huge monumental changes ABLE brought to the table and brought to many people's lives. So why ABLE? Third-party contributions into an ABLE account are not counted as income by any federally funded means-tested benefits program, the SSI program, Medicaid, SNAP, Medicare Savings Program, LIHEAP, and we're awaiting that HUD guidance. Distributions from the ABLE account are not counted as income to a beneficiary. ABLE account interest is not income. Trustee contributions, distributions from a special needs trust into an ABLE account are not income. And small gifts or an inheritance under $15,000 per year is not income when deposited into an ABLE account. Now, without ABLE, that could affect most means-tested benefits. We said earlier that the first $100,000 in an ABLE account is disregarded as an SSI resource. Funds above $100,000 are counted as a resource. When that happens, the SSI monthly payment is suspended, but if the balance exceeds $100,000 by an amount which causes the SSI resources to be exceeded, either alone or when combined with other resources. We learned that suspension and termination are different. With resources, it's important to know that an ABLE distribution for a housing-related qualified disability expense or for an expense that is not a qualified disability expense is counted by the SSI program or Medicaid as a resource if it's retained into the month following the month in which the distribution was made. When SSI payments are suspended due to the ABLE account balance, that SSI recipient retains continued eligibility for Medicaid. As an example, if a balance reaches $150,000, although the SSI payment would be suspended, the Medicaid would continue. Eligibility for SSI payments does not terminate after 12 continuous months of suspension. An individual can remain in the SSI suspended status continually for even years without a termination. But remember, if resources other than ABLE exceed the SSI limit, this particular rule would not apply. If or when the ABLE account balance no longer causes that recipient to exceed the resource limit and he or she is otherwise eligible, the payments resume. Another item I wanted to just touch on, and the last item I wanted to touch on is the fact that I sometimes hear that someone doesn't want to open an ABLE account because of the Medicaid payback provision that stops them. So I just wanted to clarify a couple of things related to that. When an ABLE account owner passes away, qualified withdrawals may be made from the ABLE account to pay for any outstanding qualified disability expenses. Qualified disability expenses could include things like payments for a home purchase, a vehicle, a modification to a home, and so on. Those are just some examples I'm throwing out there. The qualified withdrawals can also be made to pay funeral and burial expenses, and that's really an important item. Then and only then may Medicaid reclaim up to the amount spent by the Medicaid program from the time the account was opened, and the state would have to file a claim for those funds. Any remaining funds after that would be transferred to the individual's estate. So if this is of concern to you, you may want to explore opening an ABLE account and maintaining a limited balance in the account to cover any outstanding qualified disability expenses along with funeral and burial expenses if there isn't a funeral or a burial trust. Or the ABLE account actually may be used as a transactional type account. There's a lot of advantages and disadvantages shown on this screen. I won't go into them because we have limited time today, but I encourage you to download our slides from our website and take a look at the advantages and some of the disadvantages I've listed for ABLE accounts. So with that, Steve, I am going to turn it over to you for Special Needs Trust.
Okay, fantastic. And once again, thank you so much for having me here today. Well, let's just dig into this a little bit. First off, let's start off with what a trust is and how it works with benefits, okay? So as it says here, a trust is a legal arrangement regulated by state and tribal law in which one party holds property for the benefit of another, and they can contain cash or liquid assets. They can actually contain almost anything. Now let's just go take it back to what Marlene was talking about here about resources, and this is going to be really key as we start talking about special needs trusts, ABLE accounts, working, and all of that here. For most needs-based benefits, and that's going to be things like SSI, Medicaid, Medi-Cal in my state because I'm in California and we got to be different here, and related programs. The issue that you run into is twofold, is that you're only allowed to have, as an individual, $2,000 in resources on the first moment of the first day of the calendar month. That's an absolutely ridiculous number. That was set in the 80s, and if there were even the most conservative cost of living increase, that should be somewhere in the mid-15,000 range or something along that line. But be it that as it may, we have that problem here. And also with that, any cash given to a person who's on these needs-based programs will reduce their benefits dollar for dollar. So where the special needs trust came in, many, many decades ago, is taking a trust, and think of a trust as a contract, only as a contract, and this contract, which always has three players, it has the beneficiary, it has the person who sets it up, and it also has the trustee. It's a form of what's called a spendthrift trust. It's a trust where the trustee has sole and absolute discretion over every distribution, and virtually the beneficiary has none, okay? And as we're going to talk about that, that's the power of putting these two tools together, because part of a special needs trust, by its very nature, is it really restricts access from the beneficiary being able to access those funds directly. They are fairly complex instruments here, and a trust itself may or may not be counted, okay? But under the Social Security Administration and under a thing called the POMS, the Program Operation Manual System, Social Security as well as Medicaid and other programs recognize that if we have a trust, think of it as a contract where the beneficiary does not have control over the assets. It will not be counted as a resource here. And if the distributions are made directly for the needs of the beneficiary, here, for instance, if the trust was used to pay for, let's say, medical care beyond what Medicaid covers, then if you pay for the care directly, then the beneficiary didn't receive income here, but got the use of a service here, and that's basically how a special needs trust works. Up until the ABLE Act came up, this was virtually the only way to pay for things, and the issue always is that, as a disability rights advocate, our goal is to enable persons with disabilities to be as in control of their lives as possible, and this was always a problem with special needs trusts, because in these cases, the trustee has sole and absolute discretion, and the beneficiary has virtually none. So as we talk about that part of the things that excites me so much about ABLE is that when you can put these things together, when it makes sense, we can actually give the beneficiary more latitude over their life, and that's what we should be trying to do. Now, as it says here, money paid directly to a beneficiary from a trust will reduce their SSI benefits dollar for dollar. So I know as the trustee of the Golden State Pool Trust, we oftentimes, when somebody finds that they're a beneficiary, they ask, how much money do I get? And the answer is zero, and I can tell you, you can understand why people aren't excited about that. We have to pay for things directly. So we're going to see this is going to add something else. Money paid directly from a trust to someone to provide the beneficiary food or shelter reduces the SSI benefits by 1/3 of the federal rate. That's currently $277, and we're going to talk about, for an individual, we're going to talk about an example, but one of the powerful things that ABLE is able to do is that, once again, this is going to diminish that loss of income, and we're going to do an example on that. Money paid from a trust directly to someone else to provide items other than food and shelter does not reduce SSI benefits. So, for instance, I had a beneficiary today who wants to, from the Golden State Pool Trust, who wants to pay for the veterinarian costs here. And what's happening is a neighbor is paying for those costs, and we're reimbursing the neighbor. Therefore, we've paid for the service without the beneficiary getting cash. Now, in that situation, our beneficiary was not disabled before the age of 26, and that's the only way we can do it. As we're going to see, this really expands how we can make this happen here. And ABLE accounts are not trusts here. And once again, we have the link here from the POMS that talks about what an ABLE account is, and also talks a little bit about how the POMS, how ABLE accounts can work with special needs trusts. By the way, for those of you, especially after you hear Amy talk about her involvement, that link is going to be really important, and you're going to want to bookmark this thing here, because as Marlene was talking about, Social Security is a huge organization, and yes, getting the education through their $50,000 to $60,000 employees is going to take some time. And so sometimes, having these regulations and being able to show folks, hey, here's your own regulations, can really help you. Money paid from a trust to an ABLE account is excluded as income, and that is solidly not only in the POMS, the regulations for Social Security, but CMS, which oversees Medicaid, also is very clear that money paid from a trust to an ABLE account is not considered income. So this is part of sometimes something that gets really hard to get your arms around, because these are complex instruments. As we said, there's three key players. There's the grantor, or the person that creates the trust. There's the beneficiary who benefits from the trust, and the trustee that manages the trust. But here's the thing with this, and this is where sometimes you're really going to want to have somebody who understands trust to help you walk your way through that. There are basically two types of special needs trusts. The first part is what's called a first-party trust, which is oftentimes referred to as a D4A trust, a Medicaid Payback trust. There's terms for the same thing here. But what's key with this, and it can also be a pooled trust, or there's a thing called a Miller trust. Here's what's key with a first-party trust. This is when money came from the disabled individual themselves. It could be from an inheritance that went directly to the beneficiary and now needs to be sheltered. It could be from a personal injury settlement. But if the money initially belongs to the benefits recipient and goes into the trust, that's what's called a third-party trust. As we're going to see, there's a lien on that trust for any Medicaid they've used during their lifetime. Now, the other kind of trust is what's called a third-party trust, or commonly called the estate planning trust. This would be a trust where, for instance, the parent might leave funds in the trust directly to the trust for the benefit of a disabled loved one. In my case, and we may talk about this later, I have a niece with Down syndrome that I have set up a special needs trust for, and all the aunts and uncles are contributing to that trust. And as we'll talk about later, there is an ABLE account tied to this thing. So that's a third-party trust, and those funds never belong to my niece, and they will never be a payback when my niece passes away. The most common trusts we're going to talk about here today, because there's a variety of trusts, are going to be non-pooled trusts, here, both first-party and third-party trusts. But when you're looking at different options for trustees, that's one of those things where you might want to consider pooled trusts. And like many things, there are many tools out there. What's right for you or your disabled loved one, it really depends on the situation here. So going through advantages and disadvantages here, one of the advantages of a self-settled trust, this would be when somebody comes into money and they're looking at shielding for their needs-based benefits. It can be established by any individual if they have capacity to do it, or it can be established by a parent or grandparent or legal guardian here. There's no age limitation on the onset of the disability, so it doesn't have to be before the age of 26. If you're dealing with somebody over 65, there could be some complications here. There's no limitations on deposits. I have set up special needs trusts with $20,000 in them. I have a special needs trust with that easily has $40 million in it. You can put any amount you like in the trust. There's no limitations. Now, disadvantages. An attorney is needed or strongly recommended, and I would strongly recommend that you work with an experienced attorney when you're doing this. And once again, this is where, as a member of the Special Needs Alliance members are all vetted here. And part of this, when you're hiring the attorney, is not just making sure you're going into the right trust, but seeing if there's a better alternative. Maybe an ABLE account is a better alternative altogether. It may not be a great option for small amounts of money. Okay, because these tend to, and there's no set price on how you set these up, but you're probably talking $2,000, $3,000, maybe $4,000 to set this up. There's no set price. It really depends on your community and attorney and all that. Deposits are limited to the beneficiary's funds, so in a self-settled trust, you can only put the beneficiary's funds in it. This is not a tool for estate planning here. And more importantly, there is a lien for any Medicaid the individual used during their entire lifetime. So if the lien, the clawback, the Medicaid lien is important to you, this is something really important to study because each of the different tools have different rules. The harshest of the rules will be the Medicaid Payback Trust. Okay? Now, a third-party trust, okay, is an estate planning trust. Any third party can contribute. Anybody can put funds into a third-party trust except the individual with the disability, the benefits recipient. They can't put their own money in a third-party trust. They're not required to meet the strict SSI disability test. It can be for somebody who is receiving benefits. It could be somebody with a challenge here where maybe some oversight of the funds are important. Here, you can deposit large sums of money here, and I will tell you, I get this question, how much should you put in somebody's special needs trust? And, the answer is really hard to say, but, more is better. Okay? The remainder is not limited to the estate upon the death of the beneficiary. So when you set up your trust, you can make the beneficiary upon the death of the beneficiary. The remainder, it could go to family, it could go to friends, it could go to disability organizations, which I would really urge you to consider, because our disability organizations really, I know very few that are well funded, and they do a huge amount of advocacy for us. So you can leave it to anybody except the drafting attorney, because the state bar gets really cranky if you do that kind of thing. The other thing with it, and once again, there is a level of complexity here, is a third-party trust, when it becomes irrevocable, qualifies as a qualified disability trust, and it exempts this year $4,050 of trust income from federal taxes. Also, there's no Medicaid payback. What are the disadvantages? An attorney is needed or strongly recommended, and I would say strongly recommended. There are places where you could possibly find them online. These are really complex instruments, and I would say not only an attorney, but an experienced attorney, okay? They may not be a great option for small amounts of funds, okay? And also all distributions must be approved by the trustee. Remember, this is a spendthrift trust where the trustee has absolute discretion and the beneficiary has none. Now, I want to turn it over to Amy Tesler, who is actually living the dream of working with an ABLE account, and have her share with us her experiences. Amy?
Okay, hi, I'm here. Okay, when I first heard about ABLE accounts back in 2016, I didn't really understand why we would want to set one up for our son, since he already had a special needs trust. His trust was set up when he was 10 years old in order to have a plan in place for Scott and his sister, just in case we could no longer provide care. Several years later, when Scott's grandparents set up 529 accounts for their college-bound grandchildren, Scott's special needs trust was funded instead. It wasn't until early last year that I finally understood that his monthly SSI check could increase by almost $260 a month by setting up an ABLE account. By having an ABLE account, Scott is able to pay his full share of in-kind support and maintenance expenses. Even though he works, his SSI check and wages combined are lower than his full share of household expenses. His ABLE account makes up the shortfall. Setting up the ABLE account was easy, although I must admit working with Social Security was not, which I'm sure is no surprise. My advice, first set up an appointment in advance. Second, go to the SSA office with lots of documentation. I brought a letter which described the household monthly expenses and described how Scott is now paying his full share. I also brought the relevant pages from the POMs and statements from his ABLE account showing the transfers in and out. You will not get an answer on the spot. The information is submitted to a team for a higher level of review. Initially, our request was denied because the Social Security representative did not fully understand the rules of having an ABLE account. The representative was under the impression that parents could not fund Scott's ABLE account. Again, I cited the appropriate section of the POMs and asked for another review. This time, the second time, it was approved. The process took approximately 3 months from start to finish. It is my understanding that the National Resources Center is working actively with Social Security so that representatives are better informed about ABLE accounts. Hopefully the process is better now, but be prepared to provide documentation and continue to ask for another review if denied. As Marlene pointed out earlier, Scott's wages are still counted as income and are taken into consideration in his SSI monthly payment. He still receives more money since he is paying his full share of ISM. This is true for any SSI recipient. If you can use your ABLE account to pay your full share of ISM, you will benefit. The exact amount depends upon your state and living situation. In addition, the ABLE account will also give Scott some financial independence since he can use his debit card for making small purchases. I control the amount which is loaded to his card. It is also a lot easier transferring money to an ABLE card than arranging for a payment from his special needs trust. It would not be prudent to give him large amounts of money to manage, but hopefully he will be able to gain some financial independence. And now I will turn it back to Steve, and he will continue with some more case studies which illustrate the benefits of having both a special needs trust and an ABLE account.
Thanks, Amy. And I think that really illustrates a lot of the power of the ABLE account here as we talk about that, because once again, in Scott's situation, it's helped him with his employment, because otherwise, once again, he can only have $2,000 in resources. It has helped, which I'm going to demonstrate in a minute here, increase the amount of SSI he gets to over $3,000 a year. And here's the thing, you don't even need an attorney to make that happen here. And thirdly, and I think this is really important, is it teaches financial literacy. I'll just say in my case, my niece is using her ABLE account, and she's learning how to manage funds. And she had never done that before because of being on SSI. She had never had access to funds, and it's been a great tool to do this. So let me go through an example to illustrate what Amy was talking about the ISM, assuming that I get the right page. Okay, and here I'm fumbling. Wait, 30. Okay, so going into comparisons between ABLE and all that, an ABLE account grows tax-free. State income, there may be a state income tax or credit. In general, account owners direct their own disbursements, and this is really important to consider when you're making this decision. So the good thing about ABLE accounts is the account holder manages the account. In some cases, you may want to really think about that and how you're going to use that. Funds must be used for qualified disability expenses, and the interpretation of qualified disability expenses is not done by Social Security. It's done by the Department of Treasury, which has traditionally always been disability friendly, okay? So they're going to interpret them pretty broadly. They may provide for frequent distributions here. Once again, Marlene went into the lifetime aggregates here, so the most you can put into it is whatever that state's normal 529 plan is here. And then with ABLE accounts, depending on your state, okay, remaining funds after death may end up going to Medicaid for any Medicaid they use from the time the account was established. Now, by the way, we don't have a lot of time to get into this, but there are so many ways, if the lien is important or the clawback, to plan around that, I'm not sure that should be a huge consideration. Now, with the special needs trust, it doesn't grow tax-free. Here, as I said, it does have the qualified disability trust exemption. If it's a third-party trust, the trustee disperses the funds, and the trustee has sole and absolute discretion. The funds can be used for broader supplemental expenses. I know there was a question that comes up. As far as I'm concerned, there is no such thing as a special need. Whatever the need is, that's the need. So I would say that the special needs trust is slightly broader, but as far as the restrictions with an ABLE account, we haven't really found a whole lot. Generally, you're looking for long-term investments. It doesn't have a maximum amount. So once again, if you have $20 million with nothing better to do with it, you can put it in your loved one's special needs trust, and I'd be more than happy to help you with that. Here, the remaining funds are not limited to the estate. So you would have the ability for broader discretion about where it goes when you pass away. And there's a payback on self-settled trust. Once again, as far as comparison is involved here, ABLE accounts are low, incredibly low to set up. And a special needs trust, there's no set amount, but you can usually figure. I would be afraid of having an attorney do one of these things where it was less than $2,000. So you should, they're going to be a little pricey. The disability onset of an ABLE account is before the age of 26. On a special needs trust, there is no age limitation. You can set one of these up for your grandmother here if she's in her 80s and on Medicaid. Here, only one account is allowed with an ABLE account here. You can have multiple ABLE special needs trusts here. The amount that you can contribute currently is limited to whatever the gift tax exemption is, which is $15,000 a year. But then don't forget that, for the Able to Work program, you can add another $12,000 and change with that. Something to keep in mind, I don't think the Able story is done. My expectation as time goes on, we may see that contribution limit go up, but it is $15,000 a year. Once again, any amount can go annually or totally into a special needs trust. An ABLE account has to hold liquid assets, and with that, and once again, with a special needs trust, there's very few things that you can't put into a special needs trust here. And then once again, the SSI benefits are suspended if the account goes beyond $100,000 here. But the Medicaid stays in place. With the special needs trust, they don't have the same rules. Now, I wish we had more time here because I do want you to really study these things, because for many parents that are using ABLE accounts, by the time that you might reach that $100,000, if you have a child, for instance, with a developmental disability, they'll probably be on childhood disability benefits and not be on SSI anyway. This is why having someone help you and you be a guide is so important. So let's go through a case study, because I know we're racing through this. I think this is an incredible, I've helped many families set these up just for this alone, and this is what Amy was talking about. And when she's talking about ISM, we're talking about in-kind support and maintenance. So as Marlene was saying, SSI technically is for food, clothing we don't count any longer, and shelter, and nothing more. And for $771, you're supposed to pay for your food, clothing, and shelter, and I'm not sure how you're going to make that happen. But the concept is that if the person, the benefits recipient, is unable to pay what's considered their fair share of household expenses here, and if it comes from anywhere else, it could be from a family member, it could be from anyone else that will reduce the benefits. So let me just go through the story. Belinda has been disabled from birth and receives $771 a month in SSI. She is a beneficiary of a self-settled trust. It could be a third-party trust, doesn't matter where it comes from. She would like to move to a nicer apartment, which would cost $1,000 a month, where she would live alone. Okay, now it's going to be really hard for Belinda to pay $1,000 a month when she's only getting $771. So she's going to need some assistance to make the move. So Bob, Belinda's trustee, in this situation, if he were to give her $1,000 a month directly and say, well, you go ahead and pay the landlord, that's not going to work because that's unearned income, and that's going to wipe out the SSI completely. If instead she pays the landlord directly, the payments are counted as what's called in-kind support and maintenance, and what that means is that the assistance that Bob is giving her by paying the landlord will reduce her benefits dollar for dollar, capped at, this year, $277. If Bob contributes, for instance, $1,000 a month in her ABLE account, instead, and the funds from the ABLE account pays the landlord, there is no reduction in their SSI benefits. Okay? A comment I got from my wife, who is also a disability advocate, she says, well, you're laundering money. And yes, we're laundering money, and we're doing it right out in the open. And as Amy said, if you take the POMs with you and all that, this is something that is allowed by Social Security and all. So anyway, let me turn this over at this point to Marlene, I think.
Yes. Okay, thank you, Steve.
Okay.
At this point, we were going to cover a case study on EVA, but we wanted to allow some time at the end for some questions. And as you can see, there's just so much information that we're trying to provide you with. I think it's best if we go on and we skip this case study. There's 2 slides on it, and we could go over it next month. The ABLEnational Resource Center next month will be providing a webinar on strategies you can use to fund an ABLE account. So I think I'm going to go on. I'm not sure that we even have time for the questions. I'm looking, there's about 15 minutes left. Okay, so with that, I think what I'm going to do, we'll talk now, I think, about things to consider when deciding which is best, ABLE, special needs trust, both. And as we talked about earlier, some of the things to consider are shown on your screen. It's really important to consider how much money is involved, whose money is it, are there assets in addition to cash, what are the costs involved to establish that account, is that account owner currently receiving Medicaid, or is there a Medicaid payback provision, or does it even matter? What's the effect on housing expenses when they're paid by an ABLE account versus a special needs trust? Was there an unexpected windfall or small litigation settlement that could affect any means-tested benefits? Does the individual want or need to open an ABLE account in addition to or instead of a trust? Could they benefit from both? So there's even more questions than that to consider, so I encourage you to visit our website, to view some of the material online. There was a lot of information packed into this webinar. This webinar will be archived, so I encourage you, if you missed something or you want to hear a certain segment again, to go back to our website and listen to the material. Also, at the end of this webinar, or at the end of the slides, we have some resource material. So with that, I think I'm going to turn it back over to Miranda to tie things together and to review some of the resources that we do have available. Miranda?
Great. Thank you so much, Marlene and Steve and Amy, for a very informative webinar and discussion, really basic to intermediate level. You know, there's so much more that could be a deeper dive, but our intention today, you know, was to provide this foundation here and begin this discussion. So in conclusion, just wrapping things up here, you know, it is really important to remember that when trying to decide between the ABLE account and the special needs trust, that both savings vehicles are intended to work the same way to improve the quality of life of individuals with disabilities by allowing savings without disqualifying them from eligibility for means-tested benefits, and that individual's financial situation and their circumstances, there's a broad range of circumstances for people with disabilities, that those will determine which option, an ABLE account, a special needs trust, or both in the examples that were provided and certainly in what Amy shared, where those options together can be or individually can be most beneficial. So we're hoping we help to lay the foundation and begin to bring more awareness to that. We do want you to keep in mind that this presentation really was a general overview of ABLE accounts and special needs trusts. It's not meant to take the place of seeking specific guidance from professionals about benefits and account eligibility, tax issues, or benefits counseling in specific cases. So please do take that to heart. We want to leave you with, as we're wrapping up here, we've got the next couple of slides, point out some resources for you. So we do, of course, have the ABLEnational Resource Center, our website right there. We also have information on the National Resource Center partners and our partnership with the Special Needs Alliance to help expand ABLE education. We encourage you to check out that link. We have a Youth Technical Assistance Center, SSI Youth Toolkit that we are pointing you in the direction of course, the Special Needs Alliance website. And as well, an employed beneficiary can find a certified benefits counselor called a community work incentive coordinator. We want to give you the link to that as well, although that's not legal advice, but it's definitely a good place to go. So with that, I want to share a little more specificity around how do I find a Steve? If I need a special needs attorney, where do I go? So this slide we have, slide 48, gives you the website address or the email address. You can go to research a special needs attorney in your state. If you're listening in, I'll tell you the email address is info@specialneedsalliance.org. Additionally, we just want to point out we do have, for those of you who are new and learning about ABLE accounts for the first time, we have our roadmap to enrollment and our roadmap to independence. Those are on our websites. The links are right here, and each of these roadmaps has 5 simple steps with, 3-minute videos that are associated and some clear, simple guidance on steps to take, letting you know what is ABLE, who's eligible, what can funds be used for, how do I manage my account, and how do I enroll. At the end of the first roadmap, when you get to that how do I enroll, that sets you up to choose which state program might be best for you based on what your needs are and what you're looking for. So we have some very helpful tools there. And then, of course, our roadmap to independence for account owners. Once you have an account, how do you make the most of it? And that, of course, also would include things like we talked about today with if you're pairing it with a special needs trust, how to effectively use those together. So we have here, our contact information. At the bottom, we've got our email inquiries and our call center for the ABLEnational Resource Center. And with that, let's go ahead and see if we have about 8 minutes left, and I do see there are any number of questions that have rolled in, and I know we've got some folks on who are answering some of those. But I'm going to ask at least one question of each, Amy or Marlene and Steve, that came in here. So this first question for Steve came in: do I need an attorney to establish guardianship, power of attorney, and/or a special needs trust? And if I do, how do I find one who's familiar with these types of trusts and public benefits? And our online resource is a good idea. Actually, Steve, I might need to ask you a different question since I think we just answered that. Do you think that the slide we just covered answers that fairly effectively?
I think it pretty much does. I'll just give you the real short answer, which is hard for an attorney. Most of these things you could conceivably do without an attorney. And for instance, the power of attorney, I don't, once again, unless there's something special going on, I wouldn't necessarily hire legal counsel for that. Mm-hmm. Part of it is when you're looking at this, there's a couple things to look at. It's not just having an attorney. It's having an attorney who's actually not only familiar with public benefits, but also familiar with a lot of the challenges a person's participant. I mean, the fact is, every software program, and I hate to tell you this, but attorneys start with software programs, have a special needs button. And then unfortunately, in a lot of cases here, they'll find out that there's a potential beneficiary with a disability, and they'll hit the special needs trust button. Now, for instance, there's a leader of one of the ABLE programs here who openly talks about that he's in a wheelchair and his parents did a special needs trust for him, and this is the head of an ABLE program, and I don't think he really needs a special needs trust. So it's good to have somebody who not only understands what special needs trust is, but can also identify. It's like everything else. Whether it's an ABLE account or it's a special needs trust or a power of attorney, these are only tools. They're not commodities here. And so this is where it can be so important to work with an attorney, and obviously the Special Needs Alliance. These are attorneys that are vetted here, who not only understands the basic rules, but really most of these folks have loved ones with disabilities themselves here, and that can be so important.
Thank you so much, Steve. That's really helpful. And I have a question. I'd actually love to ask this question of Amy, because I think it is so helpful, and certainly for those of you who are listening, Steve and Marlene also have family members as well who have ABLE accounts. But for Amy, I'm going to ask this question as we're wrapping up our time here today and just in the next couple of minutes. From a family perspective, what are some of the things you did or a family member can do to ensure that their loved one's pathway in the future is secure for when you're no longer able to be there? I'm certain that many parents participating in this webinar today have a child or children with special needs and may not know where to begin. Do you have any suggestions?
Well, many families are lucky enough to have maybe cousins similar to the age of their child with a disability that may be around many years after the parents are no longer around. But in our case, Scott has a younger sister, and she will be his trust protector, but I don't feel it's fair to make her the trustee or to be responsible for Scott. She's got to have her own life. So one thing we're working on now is to find an agency or a care provider that can work in conjunction with Scott's trustee later on in life to be able to be that person that can help to replace the supports that his parents now provide for him. So you've got to look at the capacity of your child. You've got to look at your family supports, whether you need to set up a trust because they're not going to have enough money later on in life to provide for their own needs. It's very complicated, and every family I know is struggling with how to put it all together. We're all working on it. There is no one answer.
Right. Thank you so much, Amy, for responding to that question. And we do have another minute or so. I'm just going to ask this final question of Marlene before I wrap it up for our group today, because I think you segued nicely into this, Amy. So thanks for setting us up for this next question to Marlene. This questioner asks, if an ABLE account owner passes away, does Medicaid reimbursement take priority over other expenses?
And Miranda, the answer to that is no. We talked about that on one of the slides, that when an ABLE account owner passes away, the outstanding qualified disability expenses, they may be paid first, along with funeral and burial expenses, before the Medicaid reimbursement. And remember, we also said that Medicaid may file a claim for reimbursement. If that's an issue for someone listening, the strategy may be that for any given time, they could just maintain enough principal in that ABLE account to cover those types of expenses. But that's a decision that they would have to make. Okay, thanks.
Well, and just one other quick question for you, Marlene. How does SSA know whether or not I have a special needs trust?
Well, with that, if a special needs trust is established and the individual is receiving supplemental security income benefits, it is the responsibility of that individual or the representative payee to provide a copy of that special needs trust document to Social Security for their review. Social Security does have a review process in place to determine whether or not, if it in fact meets their criteria for exclusion as a resource. And why is that important? And that's really important because the individual, I'm certain, wants to avoid an overpayment of benefits or getting into a situation where they have to repay benefits, and for peace of mind for the individual, and importantly for family members, so that they actually know that they dotted all I's and they crossed all T's, particularly for a loved one who is incapable of handling their own benefits.
And if I can mention something really quick about that, this is where having experienced counsel can be really useful, because the problem with it is if it's not reported, Social Security has access to anything the IRS has access to. So oftentimes the trust will produce income and it'll show up on the radar screen. And what the Social Security is looking for are people that are scamming or hiding assets. So really the proper thing to do, and good counsel, is going to take any funded trust and report it to Social Security, and that can save a lot of grief. This is where having an experienced attorney can be really a godsend.
And
thank you so much. I think,
Miranda, when Steve added that,
one last.
That is an outstanding point that he added, because that is so important. And I think enough folks across the country don't know that the computers actually they do interact, and that income will come up on the Social Security mainframe. So that's really important. Thanks, Steve.
Okay.
I think this really illustrates the importance of the partnership the ABLEnational Resource Center has established with our partners, the Special Needs Alliance. And thank you so much, Steve, for being here as a representative of the Alliance and joining with us today. This is the beginning of our work together. We have a number of other activities we're collaborating on, because we really need to make sure we're in sync and in alignment and working together to clarify information around, when you might want to go with an ABLE account, when you might want to go with a special needs trust, and certainly that space where you could have both, and how to make the most benefit of both of those, and really making sure people are very clear on what these two, what the ABLE program and what special needs trust can do for you and for your family and loved ones and your life, your quality of life, which these are both meant to absolutely increase. So with that, I really want to say thank you to all of our presenters today and all of you for joining us. Please stay tuned. You'll be seeing, and do download the case study that we have available on Able and Special Needs Trusts. It goes into depth as well. We hope you'll also download the PowerPoint and take a moment to fill out our post-training survey. We really appreciate your feedback, any comments you have to share with us. That is helpful to us as well. And thank you, everyone, for joining us here today. We hope you enjoy the rest of your day, and we look forward to having you back here with us at the ABLEnational Resource Center on future trainings and presentations as we continue to explore the world of ABLE accounts and ABLE programs. Thank you, everyone. Have a good day.